Now, turning to our next panel. This is a really lovely segue from Brad's conversation to have this panel with us to start talking about the future of sustainable investing. And I was privileged enough to hear Mark Oringer, who's part of this panel, speak at a sustainable investing event earlier this year. And Mark's definition of sustainability is my new favorite definition of sustainability, which is, will you be here in 100 years? What are you doing to make sure that your business is literally sustainable as well as environmentally sustainable? So with that, I will go ahead and turn it over to this excellent panel, and the floor is yours.
Thank you. My name is Barb Brown, and I will be serving as your moderator. I am principal and co-founder of Brown Flynn. We are a corporate sustainability and governance consulting firm based in Cleveland, Ohio. Each of these distinguished panelists' full bios are on the Ethisphere website, but I did want to quickly introduce them to you and tell you a little bit something interesting about some and most of them. So to the left of me is Catherine Blades. Catherine is Senior Vice President, Corporate Communications at Alfac. The interesting tidbit about Catherine is that she's a classically trained guitarist and has been a drummer in a band, so perhaps tonight we can get her to perform for us. Next to Catherine is Jerome Harper. Jerome is Vice President of Corporate Social Responsibility at Northern Trust. He is Nintendo's world champion in Super Mario and appeared on the Oprah Winfrey Show at the age of 8. And next to Jerome is Mark Oringer. He is the Executive Vice President, General Counsel, and Corporate Secretary for Jones Lang LaSalle. Rumor has it that he's a real estate mogul that is thinking about running for president in the future. And finally, last but not least, we have Andrea Illy. Andrea is Chairman, CEO of illycaffe. And if you would like to taste Andrea's coffee, just go around the corner to Madison and 40th and enjoy it at illycaffe in New York. So to begin the panel, when we talked about what we wanted to share with you today, we thought that I might set the stage a little bit about what is going on in the investment community. And really the bottom line is that mainstream investors are indeed embedding ESG, or environmental, social, and governance concepts into their decision-making. A couple of data points. From 2012 to 2014, institutional investor assets managed using ESG has increased by 62%. A recent CFA Institute study say that ESG investors is an indication of good risk management, and considerations are now integrated into investment decisions. For those of you that work at publicly traded companies, listed on the S&P 500 or even in the EU, your CEOs probably received a letter recently from Larry Fink of BlackRock. Is anyone here familiar that your CEO received a letter? Hands. I know on the panel there must be hands. Well, BlackRock is the world's largest investor. And he is asking that CEOs outline their strategic framework for long-term value creation and wants boards to review those plans and affirm them. He believes that sustainable returns over time require increased focus on governance, environmental, and social factors. And he sees ESG issues as broad-ranging, not just climate change, but diversity and board effectiveness. These things matter, and they have both intangible but actually quantifiable impacts. Finally, he talks about ESG performance as a proxy for management quality. So when the world's largest investor is paying attention to these things, we think that as general counsels or compliance officers, these are things that should be brought to the attention of your C-suite as well as your board of directors. So that's a little bit of backdrop. And I want to begin by asking each of the panelists to discuss your views or your experience based on the positions that you hold on how sustainability and ethics can impact company valuation. Catherine, why don't we begin with you?
Avoid it at your peril, I guess, is the Reader's Digest version. Sorry. In 2015, Aflac did a corporate social responsibility study. For the previous 5 years, we did something called the Aflac Workforces Report, which looked at what do employees want, what's going on in the marketplace, how do people want their benefits. When we rolled out the corporate social responsibility survey results, we got more media attention in the 3 months after rolling those out than we did in the first 3 years of the Workforces Report. It is top of mind for everyone. And if you look at the 7 dimensions of reputation, 3 of those 7 all have to do with this topic. And if you look at it from my industry, insurance in particular, that's 44% of the model. 4 in 5 people will purchase based on reputation.
Jerome, from your perspective, ESG performance and how it impacts valuation.
Well, for us, it's simple. There are 2 sides. There's the client side, and then there's the employee side. From the client side, many of our clients have a mandate to invest with ESG in mind, either with a large percent of their assets that we have under management or all of their assets under management. So the more that we're able to develop well thought out products and services for that particular segment of the market, we can continue to grow our already $62 billion in assets under management. That's the way we are able to then monetize the conversation around corporate social responsibility. On the other side, on the people side of the equation, which I think is more important, being a borderline millennial, I think, and we've seen through our HR group, that when millennials come in to talk to us, they are most interested in our reputation. They are most interested in, especially in the financial services space, am I working for one of the bad actors or am I working for one of the good guys? I don't know that there can really be good guys in our space, but it's an opportunity for us to differentiate ourselves in the marketplace to attract and retain good employees that are going to stay with us for a long period of time. And that is really, for us, the only way that we're going to remain competitive, because a bank is a bank is a bank. It's really the people within that firm that are really able to keep us ahead of our competitors.
So Mark, how about you? Is it more than reputation, in your opinion?
Well, I don't think investors are actually thinking about it nearly enough. So I've been at my company 13 years, and every quarter, like a lot of you, we have an investor call, and the CEO and the CFO are there, and I always go sit in the room waiting for the day when a question will actually get asked by these analysts who are young enough to be my children and who are just interested in their models and who probably are more on the side of the fast traders than on the long-term investors. I'm waiting for the day, like the Maytag repairman, if anybody's old enough to remember that, where actually somebody's going to ask a question that has anything to do with any of this stuff. So it's great to see BlackRock saying something about it, but I'm actually on a little bit of a mission, and this is something you guys could all do, and probably a lot of you already. But before I retire, I actually want our investor relations people to use sustainability when they go out and they talk to investors, to actually get them to want to, as one of the primary reasons to buy our stock. What I've seen is it's like a gating item. The ones who are doing it, they want sort of us to be able to demonstrate the minimums, but they're not using it as a reason. And what I would love to see someday is some investors say, you know what, I bought your stock because I want to hold it for 10 or 20 years. I want it to be something to put in my children's portfolio, or a holding for investors that I never get rid of, and that it keeps me away from this sort of quarterly or daily in and out, and how did we do, yesterday, and all that kind of stuff, because they trust us to run the company for the long term. And a lot of people have talked about, it's interesting here, history means a lot to everybody, because you've heard about people bragging about how long they've been in business. Actually, I will say, since we're a European company, we've been in business for over 250 years. We're older than the United States. We did real estate for King George III. So the rest of you are just pikers when it comes to that stuff. So history weighs on us, and we want investors to think of us long term, because that also is going to keep our multiple up and support our stock price. And my job is not out to be helping flog the stock. In fact, if anything, it's probably keeping other people from, going overboard to do that. But on the other hand, it is something I think we can add a lot of value by telling that story.
Right. So Brad's idea is a good idea, and it seems to be getting some traction from what we just heard at lunch. Andrea, you're coming at this from a little bit different of a perspective because your company is privately held.
Exactly.
But do talk to us about how you, with the commitment that you have to sustainability and to your strong value system, how do you correlate what that has brought you in terms of financial value?
Yeah. So, as you said, Illy is not publicly listed, but the coffee sector is extremely sensitive because coffee is grown by 25 million families in over 70 countries in the south of the world, and many of these 25 million people are not out of poverty yet. So there is a problem of social sustainability, which is very much intertwined with the economical sustainability of the coffee market. Coffee is traded at the stock exchange and is a very volatile market. And the problem of the stock exchange is now that the dynamics of the volatility is commanded by other commodities than coffee itself, mainly oil. Oil commands, so just to make an example, now, since 12 months, the coffee prices are too low, considering that there is a small deficit in production and very low stocks. And the reason why it's so low is because the oil went down, you see. And this is impacting heavily, growers. The other aspect which is impacting the social sustainability of growers is the environmental sustainability, and on this side, climate change is a big issue. So I would say that sustainability altogether is becoming quickly in coffee a critical success factor, not even source of competitive advantage, and particularly for the premium part. For us, sustainability is mission critical because our company was born upon a dream of offering the greatest coffee to the world. That means that we committed to only one blend of the highest possible quality, and we have hundreds of thousands of growers producing the coffee specifically for us. How can they commit to produce the coffee specifically for us if they are not sustainable? They are not having a living or some. So that means that it's all intertwined. Reputation-wise, coffee, as I said, is sensitive, so it has been probably the most active sector of all with these certifications of fair trade or sustainable trading and so on. And this created a lot of buzz. So that means that if you are not certified, then you are, for some reason, you are not right. So the reputation-wise is impacting also on the trade relationships.
Right.
So that means that yes, besides being sustainable, you also have to communicate sustainability for the sake of being competitive in the market. So
that's great. So it's kind of coming back full circle to what we were talking about this morning in terms of transparency around integrity and ethics, but more and more around your sustainability efforts. So can we talk a little bit about how you are being transparent around sustainability efforts, and to Mark's point, how are you getting those messages across to investor groups or banks that you do business with so that they understand that this is a proxy for good risk management? So talk to me a little bit about transparency around sustainability and maybe how it is similar and different than being transparent around your code of conduct, for instance. Catherine?
Sure, I'll start. That 2015 survey was very telling, and it made me feel very old in a number of ways. First of all, when I started in the business 25 years ago, if there was a natural disaster, there were 4 media outlets and 1 nightly news broadcast. So you could go in with the big check, make a donation, get a big bang, look like the good guys. We live in a 24/7 news cycle world, and everything can be found online, accurate or not. And people are spending a tremendous amount of time investigating you, whether you realize it or not. And they're sharing that information, whether you realize it or not. And that's why it's so critical to use every channel you possibly have to push out your messages forward, regardless of, you might think you might not get a lot of bang for your buck in a particular segment, but trust me, it pays off. And I have some good news for Mark, actually, because the other thing that our survey showed was that 6 in 10 private and institutional investors will look at reputation before investing and consider it a key component.
Great. Anything to add, Jerome, from Northern Trust perspective?
Yeah, absolutely. I think the communication, how transparent we are is very important, and identifying the right communications channel for the stakeholder group that we want to target is equally important. But what I'm finding, and I would probably have answered this question very differently 2 years ago than sitting here today, we have the Companies Act out of India. We have the Modern Slavery Act out of the UK. We have whistleblower out of the UK, Dodd-Frank 342 here in the United States. There's now a requirement that we begin to think about how we communicate our corporate social responsibility, sustainability, ESG, whatever we're going to call it. It's changing very, very quickly. So for all of the compliance professionals and the GCs, this isn't greenwashing.
No, and sustainability can be a precursor. Turn to you, compliance officers, because you're saying what's coming down the road,
That's
correct?
right. That's absolutely right. And the conversation is becoming more and more complex. I spend a lot more time now this year and end of last year with our general counsel than I have in my entire career, sitting down and talking about how are we going to address these issues that we've never had to face before. So for Northern Trust, being a financial services firm where we're not making things, there's no risk of pollution, we do have to begin to think about where our business does intersect with some of these larger sustainability issues and then how we communicate that effectively.
And while these are not necessarily compliance issues in every case, some of the laws that you mentioned from across the globe are certainly hitting home. There's other kind of compliance, though, Mark, when one of your largest customers might ask you to fill out a survey or talk to them about what you are doing to manage these issues. Can you talk a little bit about kind of the credibility of data and the issue around all these ratings and rankings and even stock market indices that are interested in pursuing an ESG type of strategy?
Yeah, I think it's actually fascinating. And for as far as we've come over a 30-year period, I actually think this is one of the areas that still has the farthest to go. So it's really an opportunity for everybody to help their companies. And what I mean by that is I think there's still a big disconnect between what companies, public companies, talk about in their disclosure documents and what's really going on behind the scenes. And I think there was a flavor for that in a number of the panels this morning. So the stuff you'd really, really, really want to know about is really, really, really not there. Like, does somebody's board meeting look like a barroom brawl? What do their employees really say, sort of at the coalface? How are they? Do they feel like they're being discriminated against? Do they feel like women are getting equal pay? What do people go home at night and say about working at my company or your company? What do your customers say? And that stuff, I would argue, is primarily not there. And so, for example, and we have a long way to go in my place, so I'm not by any stretch saying we've conquered this, but we're trying to every year put in more unusual disclosure because I think it's a differentiator for us, and that's what we hear from our clients. So, for example, some number of years ago, and I stole this proudly from General Electric, which started publishing their ethics statistics on their website, which I thought was really, really cool, and hardly anybody else was doing it. So we started doing it. And so it's easy to find. We do a report every year. How many allegations did we have? How many people did we fire? What was the nature of them? All of that. I think it's a ton more transparency than you could find in most companies because it gets to this question of what's the environment really, really like in our place as opposed to others. None of this is mandated, as a lot of you know, there are different sort of regimes out there. There are organizations trying to improve this, like GRI, SASB. It's a big alphabet soup of stuff, the Integrated Reporting Project. But it's all voluntary. Everybody's doing it differently. It's really hard to benchmark. But that's the stuff I feel like our clients and investors actually do want to know about. And so when we go into a room, we're professional services, we're pitching to companies just like yours. It's a very different business than consumer products. So we're trying to get people to hire us to do their real estate, which next to their people and their IP is probably their single most important asset. And they're flabbergasted, actually, when our salespeople walk in with our ethics metrics because it's so transparent, and they can't get this stuff in their own companies. So it actually makes them trust us more because, again, we're not saying we're perfect. It's just we're saying that there are consequences to screwing up in our organization or doing something unethical. And so we talk about the 100 people that we fired. Now, that could be a little dangerous because they say, well, how come you had 100 people who were unethical? But the point is, it's going to happen. We have 60,000 people. It's just going to happen, but we take this stuff seriously. So that's the kind of information that I think people ought to want, and they can't really get. And the trick is, I think, to get proxy information that companies will disclose, even though it's private, if you're an investor, to actually ask for, to delve into your ethics program, into your litigation. What's the nature of that? How are your insurance premiums? This is something no company discloses, but actually when you think about it, if your insurance underwriters, these are financially driven people, how do they look at your risk program? It's one of the best proxies you can find. How about your D&O insurance? Has that been spiking or not? Do the underwriters trust your board? So it's things like that to sort of figure out what's the real story going on versus actually what are companies currently disclosing, which I would argue on this point is actually very little. And you'll always see beautiful CSR reports. You can't get lulled into a false sense of security. They have cars driving in beautiful forests. They have happy employees.
Flowers,
and then you find out,
bunnies,
right, when the scandal comes out, they didn't tell you that everybody hates the CEO and is scared of him, and when he walks down the hall, they run the other way.
So on that, as a firm that works with companies to try to increase their transparency, sometimes the roadblocks, quite honestly, are the general counsels. And so, we do want to tell a balanced story on behalf of our clients about what they're really doing well in the world, contributing to society, et cetera. But sometimes, just as the general counsel from GE this morning said, companies are fallible. They're gonna make mistakes. And so we do try to encourage companies to be transparent about where they have room for improvement. But sometimes that's a red flag for a general counsel. So as the GC on the stage here, I'm going to pick on you one more time. What advice do you have for folks that are wanting to increase the transparency, not just about the good things that the company is doing, but also about the opportunities it has to improve?
No company that's had a problem that I've ever seen has gotten away with, quote unquote, lawyering up and letting the lawyers take over, because the public relations experts will always tell you, and this goes back to the disastrous interview at ExxonMobil, a million years ago when they dumped a lot of oil out, and their CEO just looked like he was completely stonewalling, versus the classic Johnson & Johnson Tylenol response, which is held as the gold standard for how to do things. And I am one, you should not let the lawyers in the room when you're thinking about how to respond to a crisis.
We have this on tape, right?
Yes.
So I can play this back, right?
You will always come out of it better, and people know this. And now I think people are getting this flavor, although you see companies still doing a bad job of it, of being honest, apologizing, admit you make mistakes. And it's fascinating when you see the general counsel for General Electric saying that they're humble. That's a great thing.
Right.
And when you think about how a company like that has avoided really serious problems over the years, I think that's the answer. So be very careful with your lawyers and don't let them take over in a crisis.
Okay, thanks, Mark. I'm going to use that all over the place now. So, Andrea, as a private company, your reputation is obviously based on the product that you produce, the people that you have around you. You talked a bit before about growers and suppliers. And so how do you take that sustainability message down into the supply chain And are you asking them to be more transparent? And then even as a private company, maybe you're not as required to be transparent. Does that have kind of a full circle effect for you to increase your own transparency?
So besides having a value report that we print, publish on the internet every year, you can download any details. Illy did pioneer two big projects in communicating sustainability. One is a certification protocol, because all the certification schemes that I was referring to before are based on the idea of solidarity. So consumer paying a premium in order to make sure that the grower gets a good livelihood. But basically this alters the value equation, because consumers end up to pay more for the same, which doesn't make any sense, so they buy seldom, not every day. Whereas the right way to do is to pay more for more. Mm-hmm. And this is a self-reinforcing cycle, because the better the quality, the more consumption you get, no matter the premium. And this is why coffee now grows nearly 4 times as much as used to grow maybe 2 decades ago, thanks to much better quality. So, but there was no such thing as a protocol scheme for certification about sustainability. So we had to pioneer that, working hand in hand with the leading certifying body in the world. The company name is Det Norske Veritas. They are Norwegian. DNV is the acronym. It's by far the leader. They certify 70,000 companies in the world. And they had to work 2 years in order to develop a brand new protocol, which is called responsible supply chain. Upon this protocol, our company, as a pioneer, is audited upon 64 KPIs from the plant to the cup, in order to make sure that all the stakeholders, consumer, customers, employees, suppliers, communities, and shareholders get their triple bottom line, economical, social, environmental sustainability. So this is serious stuff. I would say even too serious for a small company. But at least we can speak openly about transparency.
Right.
And the second, more, let's say, divulgative project, and then I'm finished, has been together with Sebastião Salgado, who is an humanitarian and photographer, most famous probably photographer in the world. He did recently this important project, Genesis, about the origins of life on the planet. Very active environmentalist. And he's Brazilian, and his early life was centered around coffee, because his father was working. He was going and picking the coffee in the plantation and exporting. So this is why we worked with him for more than 12 years, and he made the largest reportage about the livelihood and the beauty of the people, the communities, the beauty of the land in the rural communities where coffee is grown in more than 10 countries. And this project is continuous, is itinerant. Mm-hmm. We made these pictures everywhere we presented, and last time was at the Expo last year. We had the honor to organize the greatest celebration of coffee in all times during the Universal Exhibition in Milan. We were the official partner for coffee, and our pavilion, which was called the Coffee Cluster, with 10 producing countries, has been visited by 60% of the visitors of the Expo. 13 million visitors, with all these huge, Salgado pictures, which was clearly telling the story about the growers behind a cup of coffee.
So you've really raised the profile of what it means to have a good social responsibility within your supply chain.
Exactly.
I want to pause there as we're getting towards the 15-minute mark before we're done here, to open it up to the audience for any questions that you might have about this kind of financial value proposition around sustainability and environmental, social, and governance issues.
Can I make a comment on this? Because
Sure.
it's something I really, as a philosophy, I believe that we are talking, sometimes we are asking too many questions to ourselves. Because as a matter of fact, 90% of the GDP, 90% of the employment, and 90% of innovation is made by the private sector. So that means that from the algebraic standpoint, the private sector companies, our companies, are the society builders.
That's right.
So if we want to have a good society, let's start by having good businesses.
Right.
So it's not a question about being ethics with some part of, or how big is the part of the business. If you want to build an ethical society, let's build ethical companies.
Right. Any questions? Do we have someone? Go ahead. We have a microphone.
Mark, I understand JLL's done a little bit of work in the integrated reporting area. Do you think integrated reporting is one way to create more value and to have the investors better understand the ties with ESG and the bottom line?
Yeah, and again, this is something that hasn't really caught on in the U.S., so this could be, a way to kind of go back and have a dialogue in your own companies. The European companies and Asian companies are actually way ahead of us in terms of having a report that looks to the future. And again, I think it's because they get less lawyered up, honestly, so they can talk about their strategy and how they're going to create value and not just being historical, which is how most U.S. companies are. What did we do last year? So I think, again, it's a very good way to tell your story in a robust, fulsome way that makes people understand what you're about, and where you can talk about some of these things that are important to this group, right? You wouldn't be here if it weren't important. But so you're not the ones who necessarily have to go, make this happen. You have to go be the proselytizers for others. But it's about, what are you about? What are your values? And why is that important? Why should that be important to clients and customers and investors?
And I would just, for reference, I would point to a couple of reports that might be worth looking at if you're interested in integrated reporting. Novo Nordisk, it's a, obviously European firm, but and SAP is also a European firm, but it's really about connecting the dots between how these environmental, social, and governance issues actually impact the financial value of your company. And in the United States, there's something called the Sustainability Accounting Standards Board. It's a nonprofit. It's kind of gaining some traction, and they say that these issues should be talked about within the context of the 10K. So lots of resources out there to talk about kind of how we're reporting. We're talking a lot about the tangible piece in terms of the financial piece. But let's talk a little bit more about the intangibles and what goes into that and what difference it makes, even from your study on Aflac's study on consumers. And I think I was most surprised because as a woman, I always think we make the best decisions. But can you talk a little bit about some of the findings and how where some men came out on the topics?
Well, it's interesting that you bring up that point, Barb, because what we learned was that 60% of people equate diversity and companies that talk about diversity with being ethical,
right,
which is not part of the whole CSR thing that you would have seen a decade ago. And it really matters now. There were a number of gems like that. I would love for you guys, if you need ammunition in your boardrooms, there are two places you can go to get it. One is in this issue of Ethisphere. My colleague John Sullivan and I penned an article that points out a lot of this data that I think will be very helpful to you as you try and do some of the things that Jerome and Mark and Andrea were talking about. It'll give you the stats and the data behind it. Or you can go to our website, aflac.com/ACSR for more information. Millennials are leading the way. They have a ton of purchasing power, lots of decision-making ability, and guess what? They're bringing their baby boomer parents along with them. And it's interesting because they were the generation that embraced technology because it was cool. We've just seen our first generation Zs hit the marketplace a year ago. And let me tell you, it's not cool to them. It's just part of who they are. I mean, when I was a journalist, I had my typewriter. The Gen Zs have their stuff. I know, right, I know. I'm dating myself again. But no, it matters, and people are looking, and transparency is key. I was so delighted to hear that over and over again this morning.
Right, so yeah, and even the workforce piece that I was thinking about from the study is that men particularly said that when thinking about a career change, when choosing one company over another, they were really going to look through the lens of sustainability and corporate responsibility to make that choice, that's the kind of company that they want to work for. And you brought up diversity and inclusion, and I know at Northern Trust that's a huge part of who you are, and talk about it both in terms of workforce as well as from a sustainability standpoint out in the market.
Yeah, absolutely. Again, going back to our attraction and retention of our employees, diversity is a critical business area of our strategy. We have to have a diverse workforce, and we have to understand what the difference is between diversity and inclusion. And we have to make sure that we are paying very close attention to the shifting paradigm as it relates to diversity. I was in a breakout session earlier, and we talked about diversity, and it was a really robust conversation about diversity on the workforce and diversity on boards. And from the Northern Trust perspective, we look to female business owners in our wealth management segment as one of the fastest growing segments of our business. Well, if we are going to target that segment of business, then we need highly educated, highly competent women to join the leadership ranks, because having a non-diverse workforce going to develop business in diverse markets just does not work. Right. And it's a reputational risk for us. I formerly chaired our global LGBT Business Resource Council, and back to the point of really using diversity as a way to drive business value. The LGBT Business Resource Council was not about ensuring that our policies on same-sex benefits was best in class or transgender benefits. It was about finding ways to develop products and services within the wealth management segment that target the LGBT community. And over the last 5 years, that practice has delivered great value to the business. And now it is a center of excellence to begin looking at other segments of the population that might need a different hand in getting them to understand that Northern Trust is the best wealth management firm in the world. So it's an opportunity for us to look at diversity and say, we embrace this, we create the inclusive environment, and then we can actually use that diversity to impact our bottom line and return value to our shareholders. At the end of the day, from our perspective, we don't talk about sustainability as planting trees. We don't talk about community involvement, writing checks. We're wanting to shift the conversation to more, firstly, shared value, and how do we make that very clear to the communities where we do business. But then more importantly, how are we setting ourselves up to be around for another 127 years? And how are we ensuring that those folks that are Milt Friedman adherents, that are the company's only responsibility is to return value to the shareholders at the end of the day, how do we ensure that we're integrating sustainable practices into that and then delivering the value back via the triple bottom line, as we mentioned earlier? So diversity is hugely important for us. It is something that we live and breathe. Our heads of diversity actually are all women, but our board, as we look at pictures of our board, I'm very proud to be from an organization where we have a very diverse board, and you can see very clearly the impact that their decision-making and their opinions have on the direction of our business.
So from a board perspective, Mark, you kind of alluded to it before that, does the board look like society? We know that from a governance standpoint, we see some of the activist shareholders really pushing forward to say your board is looking like the good old boys club, et cetera. Talk about the board's role in terms of governance of these types of issues, whether it be diversity and inclusion, environmental, societal issues, or the material topics that companies have discovered that, boy, these really have a financial impact. Where are you, or what have you seen in terms of best practices as far as board involvement beyond integrity and ethics, but really with sustainability itself.
Yeah, I mean, boards have huge potential, and I'm sure you guys see this in your companies. When the board tells management to do something or suggests it, that's when it gets done. So, and that's actually when the CEO gets religion. And this is the part you don't see is, you know, what is the board saying to the CEO behind the scenes? Because if you have a CEO who, you know, maybe diversity wasn't the first thing on, and I'll say his agenda, actually, if the board comes in and says, we want to start seeing metrics, we want to start seeing what's going on, the CEO leaves the room, and all of a sudden, he's a great proponent. And there's nothing really wrong with that. It may sound a little cynical, but that's actually a good thing. And so I think board members sometimes don't realize the potential they have just with a couple of words or a little direction to really set an organization off on this stuff. And similarly, if when people come in to report to them, they only give sustainability 3 minutes on the agenda, which then gets squeezed to a minute and a half because of other stuff, that also sends a message. So, and I think actually one of the ways, you know, I feel like those of us, and that's a lot of people in the room, sort of corporate secretaries and people who work on board agendas, and, you know, you can have good influence behind the scenes to get this stuff on an agenda. And so that's, again, something else because management hears that. And so I think the cool boards are pushing this stuff. Mm-hmm. There are probably plenty that aren't, or plenty that may be squashing it by being sort of disinterested. But the really good ones are actually, you know, propelling these issues.
Right, and I would encourage the audience, too, to look at the National Association of Corporate Directors, the National Association of Corporate Secretaries, because we know that they're asking us to contribute content because the corporate secretaries and the directors are asking these very questions. What is our fiduciary responsibility? Sorry, Jerome?
No, that conversation, the push towards understanding how, at a governance level, we're talking about corporate social responsibility in the very broadest sense, led us to last year creating a corporate social responsibility committee of the board of directors, which is a step that some other financial services firms have made, but it gives us a platform, to your point, to have the conversation where it's not an agenda item that can be cut, but to have a real substantive conversation that makes it through the executive leadership of the organization.
In our last 5 minutes, any other questions from the group here? Don't want to leave you hanging. If there's any questions here? Well, good. Well, any closing thoughts about what you'd like the folks that are attending this conference to take back with them? What messages would you like to have them take back to their CEOs? Or maybe how do they work with their sustainability officers? So, Andrea, any message that you would like to have them send back about this topic?
Well, the one I gave, for sure, and I will reinforce this message, is if you want to have a better society, start making better companies. I believe that we are living in a systemically unsustainable society because the economy is not sustainable any longer, as you can see, that lack of growth, and growth is sustained only by public debt, which is a big problem. Just check the finance, the interest, the plenty of discussion we have. Society is completely unsustainable as a consequence of too many geopolitical problems. I have the not so privileged to live in the Mediterranean, where we have a big issue now, and I fear that this issue is there to stay for a long time and probably spill over. And last but not least, the environment is a disaster. So we have, as a society, to take responsibility and start thinking as Voltaire was writing in Candide, if you want to have a better world, start cultivating your own garden.
Yeah.
So how can our companies become our garden in order to fix this broken society? Well, I think that for sure, number one is to whatever company do should be sustainable for the long term. What does it mean? Leaving something to our heirs better than what we inherited. We have to transition into a society which is not based on carbon any longer. We need definitely to go into carbon-free economy, and this can be triggered by any single. I was reading today that Whole Food is committing for 100 roofs on their supermarkets solar. This is an example.
Right. Right.
Let's imagine that you have zillion of those examples, that in each and every company, investment are driven specifically. Because this also drives the cost of energy down. It's not only about more being sustainable. You have an economical advantage because, so think about it.
Great. Mark, any last words?
Yeah, I think building on that, just the challenge for all of us when we come back in here in a year, how did we each go back and influence some of these things using our position to break down these kind of silos, get somebody else to think this way, who can actually, who can do something about it, and if it's your CEO, that's the best. But I think how can we proactively sort of turn our stuff from kind of table stakes into a way to really make money for the organization, because that's then going to flow back and they're going to get the value and they're going to want more of it.
Jerome.
I completely agree, and I think the most important thing for CSR practitioners and your interaction with those practitioners is to recognize that the business strategy being integrated into the CSR strategy is absolutely key. The CSR report doesn't matter. It does not matter. It is the strategy that impacts the people, planet, and profit. The output is, the reporting on the output is something that is not necessarily needed.
And last but not least, Catherine.
Thank you. Actually, very well said across the board. One aspect that we didn't talk specifically about is philanthropy. And if you look at using data to inform priorities, which is something we do at Aflac, you'll see that consumers want long-term sustained commitment to philanthropy, and it's just as important as all the other things we've talked about.
Wonderful. Thank you. We've covered a lot in a short period of time. Please join me in thanking our panelists for their insights.